For more on Walmart and on the retail economy, let's bring in Michael Lasser, Hardlines retail analyst at UBS. Michael, how about you? What do you think about the consumer environment right now, just based on the companies that you're watching?
Morning, Becky. I think the consumer environment right now is healthy. I think the big question is how long will that be sustained? As we get into next year, we'll start to anniversary the tax benefit that the consumer got. Now, with that being said, there should be a sizable bank gain that the consumer sees from very large tax refunds in the first quarter. But once we get beyond that, it's anybody's guess how the consumer is going to perform, given that a lot of the pressures that are out there will remain, and we won't see the benefit of the tax reform anymore.
Michael, your tone sounded a little similar to what Doug McMillan's tone was yesterday. And that's very different than Brian Cornell, the head of Target. But Brian Cornell made those comments a couple of months ago. Has the situation changed in the last couple of months where we are much more worried about things on the horizon than we had been?
2 points. One, I think we're having a good holiday. The early indications are that November was strong, and we're likely to see that continue through the Christmas spending period. But two, I think as we get closer to the end of the year, we're starting to look more towards next year. And really that's the question, is what's the consumer going to look like in 2019? And there is some risk on the horizon. So I think it's prudent to be guarded. And we're hearing that in some of the tones you had in your interview yesterday.
In terms of what the retailers think for next year, they're already making decisions on how much they're going to be buying, how much they're going to be buying. And in particular, if you're bringing in things from China, you maybe are pulling some of that forward, so you're making decisions even earlier. If you are concerned about what the future might bring, what does that mean they're doing just in terms of how much they're buying and how much they're bulking up?
Well, right now they're doing several things. One, as you rightfully pointed out, they're trying to bring in as much product as soon as possible to get ahead of the uncertain tariff situation. Two, they're trying to shift some of their supplies around away from China to insulate it from the tariff situation. And three, I think they're being guardedly optimistic in how they're ordering for next year. It's likely we're going to have a good spring, not only because of the infusion of tax refunds, but also there's an easy comparison. The weather was not cooperative earlier this year, so we're likely to have a good first quarter. And I think they'll take an evaluate, a wait-and-see approach after that.
Which retailers do you like, especially as we have all this uncertainty with the trade negotiations hanging over? Who would be your best bets?
It's interesting. We've seen a significant pullback in a lot of retail stocks in the last several weeks in light of all this uncertainty in the market. And that's created some opportunities. One name I would point out is Home Depot, which right now trades at 16.5 times next year's earnings. Yes, it's a cyclical business, and we are likely to see cycles rise and falls. But over the course of the longer run, it's likely to have a very healthy earnings growth algorithm and a very healthy return on invested capital performance. So as a result, I would use some of the pullbacks in names like Home Depot, high-quality retailers, as an opportunity to look out over the long run and buy some attractive names at reasonable prices.
Michael, we have to go, but name a couple other like Home Depot stocks.
Another one's Dollar Tree. Okay. Dollar Tree's in the midst of trying to turn around its Family Dollar performance. We think it offers a nice self-help, idiosyncratic story, along with some defensive orientation in a more uncertain consumer environment. Finally, right. Auto parts space is attractive, okay, with the ability to pass along some of the price increases that we've seen as a result of the tariffs. Advanced Auto Parts is a great way to play that. It's in the midst of a transformation as well, and we think that's going to unfold and drive a lot of value for shareholders.